Hello, fools. Tom Gardner here with our Chief Investment Officer, Andy Cross, and Toby Bordelone. And we're so excited to be able to spend this time with the CEO of DocuSign, a Motley Fool recommendation, ticker symbol DOCU. And the CEO is Allan Thygesen. And Allan, thank you so much for being here with us today.
It's a pleasure to be with you, Tom. Thanks.
So, of course, this is a standard opening question for you that everybody thinks historically of DocuSign as a signature company.
Right.
Let's talk about all that it does now with AI workflows and just get right into it in terms of the end-to-end workflow opportunities of the company.
Yeah, fantastic. Yes, well, I'm sure many of the listeners have signed with DocuSign over the years, either in a personal or professional context. And look, that's an amazing starting point, right? We are involved in the perhaps most important moment of the journey that an agreement goes through. And that was part of what attracted me to come to the company 3 years ago, was that position and affinity. But as you said, there's a lot more to agreements than the execution moment. And DocuSign had that general idea for a while that we could go upstream from people executing documents to mass customizing documents, maybe to identifying the parties and so on. But we'd never really put it together end to end in an agreement management suite. And so that's what we've done. We launched that in June of last year. And literally every stage of the agreement journey, from creating the agreement, negotiating it, managing all the internal approvals, pre-filling the agreements, executing them, and then managing them once they're executed, figuring out what you might want to renegotiate or figuring out how you're doing in your contracts or where you have exposure. All of that is available, much of it AI-enabled, which I'm sure we'll get into. We call it intelligent agreement management, and it's been fun. So it's been a revitalization of the company. I think we've rediscovered our innovation mojo and benefiting from, as I said at the beginning, from already being a trusted partner with the signing product, and that's a nice starting point. So,
two follow-ups from me, and then I'll let the real great interviewers get in the mix. When you re-energize a company in terms of awakening its desire to innovate, what are the top 2 or 3 things that you think are essential to that transformation? That just the process of getting those muscles working again.
I think the first thing is, look, you have to have the right leaders, and so I attracted some great folks that, combined with some of the amazing talent we had here, could be leading that effort. I think we had to articulate a compelling vision, a mission that felt worthwhile and that honored sort of what we had done before, but represented the opportunity. And sometimes it's better to be lucky than good. I joined in October 22, and GPT 3.5 launched a month later, and I had some idea of what was going to happen with AI, but obviously that's worked out incredibly well for us. And then lastly, I think you got to set some immediate goals that allows people to feel like they can be successful. And we set this goal of launching the first part of the suite, and in particular launching this intelligent repository, basically a place to store all your agreements that uses AI to extract all the essential data out of them. And I mean, we agreed on that in August of 22, and we launched the beta by the end of January the following year. And I don't think anybody in product engineering thought that was possible or a good idea. But I think once we did it, it was such a can-do moment for the company, and it was so exciting. It became the heart of our launch, and then we relaunched the company in a big way, and sort of gradually got all the teams involved through the sales and support teams. And I think the whole company has sort of rallied around that mission and a sense that the transformation is now possible. So you got to articulate a bold vision, but you also got to show them how they can get there, and having those early proof points was super important.
So I'm going from the forest level right down to the pine cone with this follow-up in a very unprofessional interview format. But how is the suite priced now? What has changed in pricing with the addition of all these features?
Yeah, you'll not be surprised to hear that it's gotten more complicated. But I mean, historically, the way DocuSign has been priced is we sell our electronic signature product sort of in a batches of envelope spaces. Envelope is basically a collection of documents that are sent for signing. And that was a good proxy for value, right? Didn't capture how important the document was, but it was sort of a nice, simple model that everybody could understand and that allowed us to scale up. Well, that obviously doesn't work anymore, given that we're now doing this much broader range of workflows that's not necessarily related to agreement volume. And the value depends on which parts of the suite that you use and maybe how large your library is. And so we've evolved our initial, because you got to keep it simple enough that, we sell to custom companies of all sizes. We're not just an enterprise company. We sell to 100-person companies, even to 2-person real estate offices, and everywhere in between. And so it needed to be simple to start. So we used a seat-based model with some thresholds for the size of your library. And now we're rolling out a more complicated or complex model that is a platform plus various features that get turned on, and where we attempt to capture some sense of the value that we're delivering, and that the customer would feel good about paying for. But to be honest with you, it's evolving as we speak, right? Because all of these AI features, what you really want is to align your pricing with the value that you deliver. It's just so hard to find those proxy metric that are objective and that you and the customer can agree on, and then it has to be simple enough that they can understand it going in, and that we can explain it to them in a relatively short conversation. And I don't think we've nailed that yet, but we're getting there. But we started with something relatively simple, with sort of seat plus, and then we're evolving towards more platform pricing with tokens for different types of value.
It's never really felt great as an analogy, going to you, Andy. But we're building the plane as we fly it. We've all heard it before. Maybe we don't want to actually visualize that. That probably doesn't feel great. But
we are
all
absolutely.
of the new tooling, all the upgrades. I mean, you have to be able to keep transforming yourself, and that means the value you're creating is going to shift, and it's going to be a fluid environment. It's definitely something.
I've worked for 40 years, and it's the pace of change right now, in every aspect, in our product innovation, in our go-to-market, in our packaging and pricing we just discussed, in how we market, how people discover us. I mean, all of that is just changing at a rate that is exhausting and exhilarating at the same time.
Allan, I wanted to have a follow-up on that, because you talked about some of the sales restructuring, reorganization. We've been hearing this from a lot of different software companies. I think this is part of this conversation about things moving so fast and being able to articulate your value prop. Talk a little bit about what encouraged you to change, or what forced you maybe to rethink the sales organization, and what change did you actually implement throughout the year?
Yeah. So I think to start, DocuSign was historically a direct sales company. So that, and to a fairly extreme extent. So I mentioned earlier how we have customers of all sizes. Unless you were buying the absolute most simple bundle we offered, you were basically told to talk to a seller. And so we had sellers that had hundreds of accounts, sellers that had a smaller number of larger accounts, but basically everybody was assigned to a salesperson. And so the 85% of the company's revenue was managed by the direct sales team. And when I came in, my first observation was, wait a minute, we're a digital contracting product. You should be able to digitally transact with us in a more robust way. And so we worked on that, and we've made a lot of progress on that. So now you can order all the products and upgrade as you see fit. But the second part is, as our product roadmap changed from this point solution that everybody understood well and that many people were able to implement by themselves without any external help, to this broader agreement management solution, what we needed both on the sales front and on the post-sales side changed, right? Because we're now selling a solution, a platform that others can even add on top of. And that's just a very different kettle of fish. And so we've been doing a lot of enablement, which is a fancy word for training your sales team, as well as upgrading in select places to get people who are more familiar with that motion. We're much more leaning much more heavily on partners now. So historically, there wasn't a need for a partner to be involved in selling signing, but with this new platform, we need the Deloittes of the world and their counterparts in regionally and in specific industries to do more work with us, and they're very interested, but we have to learn to dance with them and do do a better job of that, right? And so those are some of the changes on the sales side. Then the support side, of course, again, Sign was a simple, singular product, and it was, a fairly transactional support model. Like people would call or email with a problem, and we could usually solve it over the phone or that way. Now it's a much richer set of processes. You got to consult with people on how to use the AI, how to get their data in the right place, and how they might want to change their workflows. And those are all more robust things. Some of those are things that a classic enterprise software vendor would have done before, and some of it is specific to AI. This notion of building models with customers that didn't really happen before, right? That's new.
Are you finding that your sales team and your process is? Are you talking to higher levels now? Are you talking more to CTOs or CIOs who are reporting to the CEOs of the world, like you guys? And is it a longer sales cycle? Like, just talk to us a little bit about just the challenges you're seeing in the marketplace and the opportunities for selling.
It's such a good question. That's where that's the real art of the go-to-market process and software. Yes. So I would say in the small and mid-sized businesses, our sales motion has not changed a whole lot. Yes, we have more to explain, but often the decision maker and the user is the same person or very closely related. And so we've been able to have a lot, and let's face it, it's a little simpler to roll things out to a 100-person company. And so we've been able to use some of the same muscles that we had built before for Sign. Hasn't changed a whole lot. But as you move up and the companies get bigger, everything about the process is changing. And we need to, grow into that. I'd say we're still learning on the job. I mean, it's interesting. DocuSign has sold to. We're in over 95% of the Fortune 500.
Yeah.
Right? It's pretty much a standard in many industries. But we were once a C-suite sell.
Right.
When in the early days, when there was an evangelistic effort to even get people to think that it was a good idea to sign documents online, but over the last 5 years in most big companies, that's become a more mature, broadly accepted thing, and as a result, it's sort of gone down in levels in the organization. And now, but this new conversation, this new broader proposition, it's absolutely a C-suite pitch.
Yeah.
And so we are. Helping sellers to adjust to that, and of course the executive team is leaning in on that. Good news is I think we have a very compelling story, right?
Yeah.
Every company wants to do more with AI. Every company has agreement pain. We're in a very unique position to help them with both of those, and so it's a good place to be.
And Toby, just before you jump in, my quick other follow-up, Allan, is security has gotten much more complex too, and you all are tied so deeply into so wide through APIs, different ecosystems. Talk to us a little bit about any of the innovations in security, because a person's signature is, that is still valuable in this day and age.
Very, very. Yeah. So, we're a trust brand, right? I mean, if you think about it, what we had to build originally was trust on behalf of government authorities, on behalf of people who send documents for signing, typically companies, and consumers, that it was safe to do this and it would be accepted and it couldn't be fraudulently manipulated. So that's been core to our proposition for a long time. But I think the bar keeps moving up, right? The problem with AI is, yes, the good guys, hopefully like us, can use AI, but the bad guys can use it too. And so that shows up in a lot of different ways. So one of the ways that that shows up is that maybe you'd like to have a higher level of security, that the person on the other end that's signing is who they say they are. Mm-hmm. So as an example of something like that, we announced a partnership just a couple of days ago with Clear, where you can automatically log in and consent with Clear. So that's an example of taking it to the next level in terms of a digital security mechanism, but still having the convenience that DocuSign is known for. Because I mean, the reason there's a trade-off between security and convenience often, right? And in the kind of high volume or high value business processes, that the convenience part often wins because it's such a brutal hit to the business if you let go of that. But now we can deliver solutions that are both secure and convenient, and so we're putting a lot of emphasis on that. In Europe, a lot of countries now have digital ID solutions. And so you can use that. So more to come on that. And then there's the whole fraud side, which is a never-ending battle. I think we've made a lot of progress in super early detection of fraud, but that's a game that you can never rest on. There's a lot of that.
Thank you.
I want to go back to something you said earlier on when you were talking about how you serve different types of customers, both your enterprise and your small and medium businesses, right? How do you balance that as a company as you're looking to grow? Because I imagine the needs and the desires of those two groups of companies can be quite different. So how do you prioritize if you need to prioritize? And how do you kind of navigate that path of we need to serve both of these at the same time while still growing this business?
That is a key strategic question. So, look, part of what attracted me to DocuSign was that it had such a balanced portfolio. I know public markets tend to be most excited about big enterprises, but if you have a well-executing SMB business, it's gold, right? It's super stable. Yeah, it has slightly different, churn dynamics, for example, than an enterprise business, but it's amazingly powerful if you're able to do it cost effectively. And so DocuSign had a very good history of that. And I had some involvement in SMB businesses in the past at Google and elsewhere, and so I knew how valuable that was. And when we launched the new suite, we started with SMB and mid-market because we knew that we could get to product market fit faster, right? It's a high bar to come into a JP Morgan Chase or a Disney or you name it, and say, hey, we want to manage all your agreements and, digitally reimagine all your agreement workflows. There's going to be a checklist pages long to even be considered for that. Whereas you go to a person with 100 or 500 people, you can actually realistically help them with something like that fairly quickly. And then over time, we're evolving towards the enterprise, which is where the larger opportunity is. So we have a huge addressable market in SMB mid-market. I think we've announced we have over 10,000 customers live. You can only do that if you have a good SMB mid-market business, and that number keeps growing very robustly. And then we've started to sell to enterprises now, and we've built out some of the features that you need to do that. And our last quarter was sort of the first time that we really saw some larger enterprise deals for intelligent agreement management. And we're not depending on that in the very short term, but in the long run, that's the even bigger unlock. And so over the next couple of years, I expect the enterprise will become a larger part of our business than it is today. But in the very short term, we were able to pick some amazing low-hanging fruit in the SMB and mid-market. And to your point about the tension, they are different, and they operate with very different metrics, right? And so you have to run the SMB business as sort of an operational machine that in sometimes looks even more like a consumer business in terms of just the velocity and the volume and the discipline you have to have. And then the enterprise business has a little bit more heterogeneity, and the sales cycles are absolutely longer. It's interesting. I mean, so far in the mid-market and SMB space, our sales cycles have not been longer, nor has our install cycle for these new AI features. So that's amazing. Frankly, I had not dared to expect that. But people are. I mean, part of the magic is we have your agreements typically already, and so if you can tell us that you consent and you want us to process them, we can process them and make them available instantly. And people are typically very curious about what's in their agreements, and so they adopt very quickly. I think when we go to enterprises, and you need to integrate to 50 different systems, and people need to change their workflow, that starts getting. That will get longer, both from a sales and post-sales perspective. But I'm very optimistic that, we've long had a reputation that people can get quick time to value, and that remains a key part of our proposition. And we do not want to become, a classic enterprise software company where you sign the deal and then a year later you go live.
Right. Yeah. So it sounds like from what you're saying that it's there is some element of your ability to kind of grow into enterprise with your existing product.
Yeah.
But there also might be some level of customization there.
Yes.
Maybe even some partnerships you got to reach to kind of serve some of these bigger companies.
Yeah, we've designed it as a platform. So that was one of the rules I sort of laid down when I came here is that, look, we're going to build everything so that it has APIs, so both so to increase velocity internally, but also to allow others to extend our platform. And some of the first people to do that, of course, are corporate customers that have their own IT people, and they want to do that. And then, as you mentioned, the system integrators also would like to do that. And over time, we'll develop a marketplace, and we have some of that functionality, and the ISVs can build businesses on top of DocuSign. But I think that's the order it'll go in.
Now, you hinted at something there that I'm very interested in. I come from a legal background, which is sometimes people don't even know what's in their documents. Right?
That's true.
So when I'm thinking about this whole agreement management platform, the contract lifecycle management, from that background of someone who has written and negotiated some of these agreements, I would love, and I'm sure many chief legal officers out there would love, some system that when the company is considering a certain action or a new agreement or a new direction or whatever, what have you, all the things that are in those existing agreements automatically get surfaced.
Yep.
Right? And so they say, well, this might be a problem here, this might be a problem here, you got to think about this. Instead of having someone last minute saying, oh, well, there may be something in someone's filing cabinet somewhere we want to take a look at, right? Are we close to that world where you can integrate everything and you can say, here is your existing base that you need to think about? Or how far away might something like that be?
It's a nuanced answer. Look, I think we're there today in terms of being able to create a repository of all your agreements. Obviously, we have to work with the company to find them, and you're right. They are sometimes literally in filing cabinets or in the digital equivalent of a filing cabinet on some SharePoint drive somewhere, or maybe in somebody's email, or maybe stored on a desktop. And you got to do that cleanup process. But that is a manageable feat. And once you have that, then you can use our AI tools to extract the high-level metadata. So you can get an organized view of, what are your agreements, who are they with, what are the key dates, some key attributes of those agreements. Then you can run queries that get more customized and essentially train your AI to look for things that are specific to your company or industry by looking at some of the agreements and having a lawyer highlight things that you want the AI to train on. And you can have a set, and you can run it against a set of playbooks. So let's say you have a standard vendor agreement or a standard sales contract. You can run the agreement against that and have it identify, we should probably renegotiate the following 3 or 5 things when this comes up for renewal, whichever side you're on. That's all stuff that's available today. Now, when you get to things that are, give me an overall risk assessment of everything in this contract and rank it by value or risk exposure. And that starts getting into things that involve a lot of judgment, a lot of subtlety. I think we're still a little ways away from being able to do that well. When you're getting to drafting agreements sort of de novo and with a few instructions, taking inspiration from the following agreements, draft something. You can do it. The question is, will it be good enough to share with anyone? So I think we're in the middle of that, but we're already at a point where there's so much low-hanging fruit to get value from automated review of agreements and from your agreement library that's, in my mind, where you can get started right now and get a lot of value. And then there'll be a journey here over the next couple of years to do some of the things that, yes, the chief legal officer would always like, which is, I've got this new risk. Tell me which of my agreements I have exposure in, and rank them by size of exposure. We'll get there. That has been articulated as a desire many times, but the more custom and one-off it is, the harder it is to train a general purpose platform for it.
Let's randomly leap forward 12 years and ask ourselves, has DocuSign replaced law firms?
No.
Have we moved beyond just the management of the actual workflow to a lot of the negotiation, the whole process of coming to agreement can be automated?
No, I don't think so. Well, let me say a couple things. First of all, I think you will absolutely see automation of some lower level legal work activity today. So things like, you could imagine an automated negotiation of an NDA. I don't think that's super futuristic. I think that's mostly possible with tech today, and since there's not that much risk in most cases, I think we'll see some of that. And you can imagine sort of agent type onboarding of new vendors and new clients. But I think that's not really, I think, why people retain law firms. Yes, they do some of that work today, and so some of that work will go away. But the reality is that legal is one of the most under-resourced functions in any company. It's one of the reasons why everybody always complains that legal is a bottleneck, right? So there's so much headroom, I think, to take those manual but repetitive but manual tasks and automate them. So I think on the more complex judgment where there's meaningful amount of risk involved, sure, the AI will do a lot of pre-processing and will serve it up to humans, but you'll still have human review for an extended period of time, in my opinion. Now, I think it's very scary to try to forecast what's happening in 12 years. That was your time frame?
Yeah, that was sort of actually, I don't even know if we as a species are here.
That is a long time. I probably shouldn't make any forecasts about.
Well, I mean, it is. I mean, that statement on its own is we're still coming to terms with this. I think that, if we had said 12 years, how long of a time is that in 1995? Obviously, we know the pace has picked up so much. So it's really interesting to think how planning happens. I guess that your answer to that suggests that my second question, which is more of an idea I wanted to play out and have you shoot it down. You've already shot it down. But would we ever think about renaming our company from DocuSign to DocuFlow?
We had that discussion because we went through a significant rebranding exercise holistically, not just about the name, but about our look and feel and what we were trying to communicate about the brand when we were getting ready to launch Intelligent Review and Management. And I said to the team, look, I was willing to consider anything but changing the name. And look, if you've got a name like ours that's instantly recognizable, and has very positive, generally, affinity, I think the bar is incredibly high to mess with that. We have over 1.5 billion individual profiles that have executed a document with DocuSign, right? We have over 1.7 million monthly paying customers that pay us for our services. I mean, those are very large numbers. I can't even imagine the media plan and the effort that it would take to meaningfully substitute that if you tried to change the name. So yes, I did have people who suggested that, and of course it does tie us back to Sign. But
they and I were dismissed from your company.
I'm sorry, but I don't think that would be a good idea.
Oh, I love the answer. Thank you. Thank you for that. Just one more question, then over to Andy. Just the competitive picture with all of this change, and how an investor might measure it. Like, should we be watching your gross margins from year to year, because that's generally a factor that indicates something about pricing power and the efficiency of it. Like, how should we track the competitive dynamics and market share in this category?
I mean, if you look at our gross margins, they've generally been very stable or slightly improving. So I think we're pretty good on that. But I don't want to be Pollyannish. Look, if you look back at our legacy product, Sign, look, we are the leading provider, practically identified with the category. We probably have over 50% global dollar market share. But we do have a long list of competitors that have created simpler Sign products, and you probably have encountered them. You may not even be conscious that you were using something other than DocuSign, but they are out there. I think we've gotten to a place of sort of stability there, where companies have high value documents or high value processes. They generally use DocuSign, And for most mid to smaller companies, it's not worth it trying to have multiple platforms. In terms of our new strategy of this broader agreement management platform, we're essentially establishing a new category. There's a predecessor category called contract lifecycle management, which is just for super high-end enterprises, aimed specifically at contract specialists, where we and 4 or 5 other companies compete. But it's always been a limited scale and scope category. So I think we're setting the pace on this broader reimagination of how agreements get done. Now, forget about how I look at the world. There's lots of stuff happening outside. There are people coming at the agreement space from all kinds of places that we never historically encountered. So I think the space I'm most focused on is there's a ton of startups in legal tech and helping with various aspects of legal workflow that are doing amazing stuff, and we want to make sure we keep an eye on that. We don't really try to do tools for lawyers per se, right? We are in a management platform. I'm just as focused on helping salespeople or purchasing people or HR people get access to their agreements as I am helping the legal team. And so we're not trying to get you super smart access to how to draft a 500-page merger agreement. There are other people who do that. But I think over time, those are all adjacencies, and those people are smart and scrappy. And I've been an entrepreneur most of my career, and I'm trying to keep a close eye on that. So we bought one company, a venture-backed company in Seattle last year that was doing some great work, and that's been an amazing addition. And if we find more like that, we'll be very interested. So.
Allan, just to continue on Tom's comment about some of the metrics, you since you've come on, DocuSign has done a very nice job moving up the GAAP profitability curve. Before you came on, it was an operating loss of hundreds of millions of dollars per year on a GAAP basis, and you're moving up, and you generate a lot of very healthy free cash flow margins.
Yeah.
My question, as you are headquartered in San Francisco, you've been in the tech industry for a long time in different capacities. Help us understand the balance on stock-based compensation as we look at tech companies utilizing stock-based compensation. How do you think about what levels should be stock-based compensation, if at all? How do you and the board talk about stock-based compensation in general?
Yeah. Actually, we talk a lot about it. Look, when I joined, there was sort of a reboot of the executive suite, and that created sort of a one-time wave that we're still living with a little bit. But I think we've got a great team on the ground now, and I'm not expecting anything like that. And over time, we've then been able to throttle down. So, for example, our overall annual grants have come down meaningfully over the last couple of years. We've changed, for many frontline workers, we've gone to an all cash-based compensation system. To the extent that we do grant equity to executives, we make it performance-based, so it's tied to stock outcome and improvements to the bottom line and so on. So we're very focused on working our dilution down, and of course we use some of that cash flow that you referenced to buy back shares, so that on a net basis, we can bring down our share count is what we'd like to do. So I think we're working on it. We don't exist in a vacuum, and you do have to attract execs, technical talent, and others do offer stock. And
it
so
just costs about $100 million a year per AI, engineer.
Well, we're not paying $100 million to anybody, but yes, I'm aware of that price point. So we're absolutely focused on it. At the end of the day, if I was an investor, right, I'd look at the value per share. Don't come to me with these gross numbers. I want to see how you're doing on a diluted basis, and so very conscious of that, and that's a big part of our conversation with institutional investors.
That's great. That's great to hear. Thank you for sharing that. I want to get back a little bit to just on, again, investments into innovation and AI. You've been focused on bottoms-up innovating. You've been talking about this. You've done that. Talk to us a little bit about the product development, the innovation engine. If you maybe peel back the curtain a little bit for us at DocuSign without without getting too much into the weeds, but just curious how you think about motivation, your team, and just the release schedule. How quickly are you trying to innovate these days?
Yeah. Yeah, I think we had allowed ourselves, DocuSign was a, COVID darling, right? Where we were growing very nicely before COVID, and then we have all this demand pull forward from COVID. And then when that receded, it was a hard reset. Some use cases fell away, and customers have pre-bought and bought more than they needed, and so it was a pretty tough reset. And that affected all parts of the company. Right. And I think one of the things that's a hidden cost of that kind of automatic demand is that it also allows it's not just your salespeople who fall asleep and forget how to sell. Your product engineering organization said, well, as long as I keep the lights on, I can sort of do what I want. And I think we lost some DNA. There wasn't as much of a focus on shipping and moving the needle from an innovation perspective. And so, as we discussed earlier, I think resetting the bar, articulating a new vision, explaining to people that they were empowered to go and innovate and suggest ideas, raising expectations on release velocity. I mean, we were doing a couple of releases a year, and now we're shipping much more frequently. Yeah. And so all of those things are little things that you do. You give people better tools to get their work done faster. All those things have helped speed up productivity. And I think we're in a much better place. I still would like to move faster. I'm impatient by nature, and I think particularly in today's environment, you kind of need to be impatient. You can't be looking at yourself or how you are doing compared to how you were doing 2-3 years ago. Mm-hmm. You got to be looking at how fast are the cutting edge companies going, and they are going very fast. And so I keep trying to reset the bar with external benchmarks, right? Because that's what's needed, and you want to bring in some talent like we did with the acquisition that come from smaller, more entrepreneurial companies. So I'm very pleased with and proud, frankly, of the progress that's been made. I think any tech company, it starts with product, and there's been just an amazing rejuvenation of the team and their excitement level. And I think it comes back to all those factors.
You have been very, DocuSign historically has not been a super acquisitive company. You just mentioned, right. Sprinkling and in making these investments. Mm-hmm. Do you feel like bringing in fresh blood kind of into the family helps to continue to
I think it does.
Emphasize the points you're trying to make?
I think it does. I think the Lexion acquisition was fantastic for us. The team there and the two founders are still with us and in senior roles, leading major parts of the product engineering organization, and they're fantastic. And I think they've blended really well with the team, but given that spark and that proximity to customers that you kind of have to have for survival when you're a startup. And so, I'd love to do more of that. But you got to find it, and of course, the mirror image of that $100 million individual role is that if you're looking at how AI startups are getting funded, it's not an easy place. You got to find people at the right time. So.
Yeah. Thank you, Toby.
Yeah. So I'm curious to hear from you in terms of the competitive landscape out there. Thinking about the competitive landscape, what do your customers tell you if they talk to you about this, if they share this, in terms of their rationale for why they go with DocuSign versus someone else? Is there something that they feel you offer that they can't get from someone else or someplace else? Yeah.
I mean, I think historically it's been about trust. It's been about manageability. It's been about integration with their core platforms. I mean, we're pre-integrated with every major tool, right? So whether you use Salesforce or Dynamics, or HubSpot on the CRM side, or SAP or Coupa on procurement, or Workday or SuccessFactors for HR, those they come out of the box pre-integrated, so you can use it in the tools you're already familiar with. So those have been historical strengths of ours, and we don't want to lose those. I think today with the intelligent agreement management pitch, beyond those, I think the integration piece the fact that we offer an end-to-end suite, historically, agreement processes have been chopped up into little pieces, and somebody does, the presentation of the contract. Somebody helps with negotiation or legal research. Somebody helps with approvals. Somebody helps with identity. And those are all separate tools, and the customer has to stitch them all together. And so the fact that we can bring it all together and integrate a suite is very, very powerful. I think on the AI front, most customers are do not want to take on the concept of developing their own agreement extraction models. But at the very high end of the market, a large company with a big IT department, that will be something that you encounter from time to time. And in those cases, we usually just ask them to run a merit-based test where they can see, because I think we've learned a lot, right, from processing. I think we have over 100 million agreements that have been consented now for upload and AI extractions, and so we can bring a lot of both scalability and extracted learnings to the table out of the box that'll be hard for a team to match. And then there's all the workflow tools that you typically that people don't usually have. But these days everybody wants to be at the cutting edge and frontier of AI development. And if you're a CIO in a Fortune 50 company, you're probably not doing your job. You're not got some internal AI projects, right? So we'll encounter that. But we've done very well in those examples. I had a big one of our large telecommunications companies. They were there was a 3-month delay in our deal because they wanted to run an internal test, and they ran it, and they came back and said, no, we want to proceed with you guys. So I'm very optimistic that when the frothiness settles down, we're in an extremely good position, and actually better the larger the company.
Do you see any threats on the AI front in terms of, we're talking about this a little bit, but in terms of being a threat to your business, allowing competitors perhaps to come in and more easily compete with what you're doing?
I think that AI is so accretive to us that let me put it this way. I think what it unlocks for us and for the category is such a massive leap forward. Historically, agreements have been dumb flat files, right? They might as well have been in a physical filing cabinet. Yep. Everybody had this PDF stored somewhere, if they could even find it, and they didn't know what was in it, and they had no tools for managing that. And so AI really transforms that. So that's an unlock, not just for us, but for everybody. But then the fact that we started in this position of having all this understanding of agreement structure and being involved in so many steps of agreement workflow and having the distribution to all these companies, look, you got to worry, as we talked about earlier, about some smart startup coming up with some killer functionality that you hadn't thought of or can't replicate. But I feel it's been a blessing and just a giant opportunity for us, and I'm just very fortunate to be leading DocuSign at this time.
How do you? Go ahead, Toby.
Oh no, you can go ahead.
How are you sourcing your AI talent?
Yeah.
And I guess a second one, as you're pondering that, to what extent do you think upskilling of existing talent into AI tooling is important versus, sort of born and raised AI engineering practitioners?
Mm-hmm.
How do you see the dynamics inside
so,
the company?
Yeah. We are obviously trying to upskill everyone to use let's distinguish between using AI development tools, which I think every engineer needs to know how to do. And that's a ongoing project. I'm sure you hear that from others, that there's amazing progress with AI-assisted programming tools right now. I mean, literally every 3 to 6 months, the frontier moves, and we're trying to make sure that our engineers have available to them the best tools, and that our managers and teams know how to use them and leverage them. And I think we're doing fine, but I don't think we're at the cutting edge. And you compare us to one of the frontier LLM companies, I'm sure we got a lot of room to run. I think in terms of the people who actually work on building the AI itself for our applications, we have a great team that we've assembled carefully over the years, and look, that's one area where we're always open to hire, and we're always looking, whether it's for referrals or inbound, and you got to have a dedicated effort on that. We're not trying to build foundation models, right? I'm not competing for the kinds of people that Mark Zuckerberg is trying to hire from other companies. I mean, we are standing on the shoulders of multiple foundation models, and we are bringing our expertise and agreements, but we're not trying to reinvent the wheel. If I can use a GPT on Azure or Gemini on Google, and I can run those head to head and other models, that's what I want to do. I want to leverage the amazing product development and CapEx investment that those folks are doing, and then build on my specialized data access and expertise and workflow understanding to build great solutions for contract workflows. So we are a little bit more applied than the folks that are working at the cutting edge of building large-scale foundation models. So we're thankfully not competing for people who expect $100 million. but it is definitely the most expensive roles and a very hard place to recruit.
Yeah, I mean it's K-shaped in a way, right? It's not clear what that separation is going to look like in terms of compensation roles as the new technologies create automations. It's not just that they create opportunities, which is a wonderful part of it. It's just if you're not pairing up with that AI talent to see what's possible and quickly deploy that, it's going to be harder and harder in the workforce, I think.
Yeah, no, you're right, and of course we talk about that, and it's a core goal, particularly for my product and engineering leaders and IT lead, to find the best talent.
Are you an in-office company?
We increasingly. So our, we went fully remote during COVID, and about a year after I joined, we said, okay, we're going to designate each job category as either remote or hybrid. If you're a hybrid, then you should be in at least 2 days a week. We've gone to 3 for some roles, particularly customer-facing roles. So it's still evolving. So I'd say we're sort of in, I think, fairly employee-friendly and flexible, but not fully remote. And I think more and more of the newer roles, we would love to have you in one of our hubs. But we definitely support a lot of remote folks.
You used the word, and you used it with a smile. It was not I'm not bringing it up in any negative way. You used the word exhausted with all that's happening. It can be exhausting. You've also emphasized that you and the whole organization is still learning in a very fluid environment, which for me as an investor is very comforting. Of course, we hear in the financial markets like the investor hates uncertainty. But if you don't embrace the complexity, and keep rolling forward and figuring things out every week, you're going to end up looking, not you, but people will end up looking more like the Time Warner executive, as the internet bursts through. Yeah. So I'm wondering personally a little bit, you and or your team, how do you pace yourselves so that you don't burn out? Since not only do we have access to work through all devices all the time, but now we have new tools being upgraded every 2 weeks, and all the implications for all of our markets are. What is it that causes you to not actually burn out?
Well, so first of all, I think if there ever has been, I don't think there's ever been more of a premium in being a lifelong learner, right? I think, and that's true at every level, and maybe even more so for senior leaders. I think you cannot rest on stuff you learned 10 or 20 years ago, because things are being obsoleted so much faster. So I'm curious by nature, and I try to be open-minded and learn something new on a regular basis. And that's what I expect from my team, and I hire. There are only a few attributes that I really look for consistently, regardless of role, and that would be one of them.
What are the others? Sorry to get free advice.
I like perseverance. I got my early career was all startups, and I think focus and perseverance, is the mark of companies that succeed, and I look for that in people. And then I want people who are kind but direct.
A very beautiful balance when you can find
It's a
the
good balance. A good
combination.
balance. Hard one sometimes, but a good
Yeah,
balance.
warm and accommodating, for everyone, and harsh and truthful. Don't quite work.
So in terms of my personal energy, look, I think I've always been a high energy person. But I have to say the adrenaline level of this role is like nothing I've experienced before. I used to run a large team and frankly a much bigger business at Google, and I was working hard and I was very focused and I had it was a very dedicated, and I thought I was really running at full speed, and then I came here and I realized, oh no, there's another gear and the weight that comes with feeling responsible for the company. In terms of recharging, I do feel that sense of obligation is very energizing. Now, of course, my primary recharge is I spend time with my family. So I'm happily married for 36 years, and I've got 4 adult kids, and now my first grandchild, and hopefully many more to come, and love that. And frankly, I don't have time for a lot else. So, my golf has gotten worse in the last 3 years. So, I don't. But I don't find it. It's not like I'm sitting and feeling like, oh, I got to go relax somewhere. I'm feeling very energized by the mission, and I think we have an amazing opportunity, and I just know how precious those are, and so I just know we got to seize that moment.
I mean, one quick follow-up, and then we have some wild card questions to end. But you're having run a large business at Google, and a large team, and then finding now as the CEO with that, another gear that you didn't know you had, and the sense of obligation and true ownership, the feeling you have of being responsible for every detail. On some level, right? And of course, delegating.
On some level, yeah.
To what extent do you think, because of those two experiences, you've cracked the code on how to get that sense of obligation and ownership among the executive team at DocuSign? Like, is that possible, or you really have to actually sit in the CEO seat to get that next level gear?
Oh, I think I've got some really highly motivated folks. Look, you want to hire people that are better than yourself, and I feel very fortunate with the team that we have assembled. Look, I had to make some changes, and 6 of the 9 folks that report to me are folks that I've hired over the last couple of years, and but I'm really happy with not just their expertise, but their dedication. I think that's one of the things that's exciting. I feel like we have a articulated mission and opportunity, and the whole team has bought into that. And then, when we recruit people at the next level, we recently brought on a new board member, and I think that's one of the things I hear from people. It's very striking that you meet the different members of the management team. They're very consistent in their articulation of the opportunity and how excited they are about it. And so I don't feel like they need any extra encouragement. That said, I might send them an email from time to time.
That live,
just to make sure.
That live email or Slack at 3:17 in the morning does the trick.
Yeah, I might have sent some of those.
Or you get, yes, exactly. Do you find inspiration from anything that from like the Jensen Huang approach that's been written about just recently in different books about getting different emails from the team, those kind of things?
I mean, Jensen he's otherworldly. What he's done is just incredible. So I think, I mean, the way that he's got more than 50 direct reports, and I mean, you can't argue with the results. It's
Yes.
unbelievable what he's done with NVIDIA, and they're a big customer of ours, and they're incredibly impressive
Yeah.
up close as well. So, look, I mean, there's some iconic people out there who have an extra something, and look, I think you can be inspired by them, but I don't want to compare myself to Jensen or somebody
Fair.
of that
Oh,
iconic
yes.
stature.
I mean, one of the things I love about that is just one of the best pieces of advice I got about leadership was figure out who you are and take it to the max. Because if you think
Yeah.
about it, Warren Buffett has created essentially $1 trillion company,
Right.
was the sitting CEO in his 90s, with hundreds of thousands of employees, and routinely just met with eight people, and maybe had one thing on a schedule each day. So
I
many
know.
different ways to win.
Yeah, I mean, there are many ways to skin the cat. I think that's so true, and that's true of management as well. I think the more experienced you get, the more you realize that you should just try to get people to do more of what they're great at, instead of trying to make them into something that they're not. And that is a hard lesson, right? Because earlier on you think, well, I want everybody to fit this template, or maybe you hire in your own image, or maybe some other idealized model that you have. And that's not the right thing, right? Everybody indexes somewhere, and you want to help people find their superpower and leverage that for the benefit of the company. So that's what I try to do.
Just
Final
very
3
quickly
minutes,
speaking.
team. Final 3 minutes. I know I took up
A
something.
few minutes,
sorry.
just very quickly. Just some fun questions here.
Yeah.
Just, Alan, speaking of NVIDIA, and we talked about the $100 million, then NVIDIA
Yeah.
made this massive planned $100 billion investment in
I know.
OpenAI. You sit in the middle of
Yep.
San Francisco right now, and are the numbers even for you, just eye-popping? When you see these numbers, is that super exciting? Is that a little concerning? Give us some context from your
To be honest with you, look, that is some very high stakes poker that's being played. I don't think we've ever quite seen anything like that, right? I mean, the size of the capex checks that the hyperscalers are doing, there are 4 or 5 companies that are doing 70 billion plus a year in capex, right? And then you've got some of the rounds that are being raised, and everything is it seems 10x of a prior cycle in that regard. So look, I don't worry about what I can't control, but what I will say is, as a beneficiary, I'm thrilled.
Go
I mean,
for
this
it,
is
team.
like the greatest thing. I'll just give you one example. So everybody talked about this capability that we've now all been handed on our phones and desktops, and how transformative it is. And I agree with all that. I think one thing that people miss is the cost curve. So as a result of the amazing advances NVIDIA is making, that Microsoft and OpenAI and Google and others are making from a model size and data center build-out perspective, and even some of the model tuning that people are doing. So they're not just about how do I answer the most complex questions the most accurately, but how do I, at a tenth the cost, answer questions in a good enough way, right? It's super important. So I'll just use one example that illustrates this point. So when we started working on this idea of this intelligent repository, place to store all your contracts, this was in the summer of 23. One of the key things was, well, what would it actually cost on average to store and process an agreement with AI? And then we did the math on, the average size of the library for a typical customer, and we were like, I'm not sure that all these customers are going to be willing to pay what it costs us to do this. And we may need to, in our pricing, meter them based on their usage and the size. And so if you just take the cost per agreement, stored and processed as X, and you go 2 years forward to this summer, we're now at 1/100th of X. So basically, we've gone from, I feel kind of constrained, I may have to charge them, based on the size of the libraries. I'm like, go ahead, whatever, give us all your agreements, whatever, it doesn't matter. And I've been there for the whole Moore's Law ride in Silicon Valley, where we were, dropping, it was 30% a year. I mean, this was a factor of 10 a year for 2 years going. Now, we've consumed a lot of that additional capacity, right, in doing more complex things. But it just is. I've never seen anything that comes close to that before. And so that's what's happening right now. And when the cost of a key input is dropping by a factor of 10 a year, I mean, that's just insane. So please, Jensen, keep going, and everybody's building the models. I'm so appreciative because I think it's just going to transform what we're going to be able to do.
Toby with the final fun question.
Final fun question. Here we go. How long before DocuSign totally replaces notaries and I never have to go to a notary again?
Well, I mean, the flip answer is, I think we could do everything from a security perspective that notaries represent today with modern digital identity stuff. But that's really a legal question because notaries are required in various states for certain types of transactions, and as long as it's required, we will have notaries. Many states have now adopted laws allowing for online notaries, and so that makes things a little bit more convenient, and we offer online notary services to our customers, and I think you'll see more of that. But of course, that's still they're still a human. You just you don't have to drive to meet with them in person. So look, I think it'll be with us for a while because these things move very slowly. But I think for a larger and larger number of transactions, you will get notary level security with a much lower degree of friction.
Thank you.
Allan Thygesen, CEO of DocuSign, thank you for spending 63 minutes with us, 3 minutes of overtime. And we enjoyed every minute of it. Obviously, I've been following DocuSign since its IPO all the way through, and so excited about what you're creating there with your team and all DocuSigners. Are we DocuSigners when we come to work? What do we call ourselves?
We are. Yes.
Yeah, we're DocuSigners. all of your teams, in the way that Jensen Wong is working to bring us new technologies, you're working to bring us investment returns, and we thank you just as much as we thank Jensen. And thank you for the time, and best of luck.
Thank you. It was really great to chat with you guys. Appreciate it.